Welcome back. You're still with us on Markets Today. Let's get to the rest of the headlines that we're tracking for you this evening. Well, the fourth headline this evening, Paytm rallied close to 15% in trade after reporting a strong loan growth for the month of January. A ratings upgrade also supported the stock. Abhishek Kothari is here with the details.
To begin with, Macquarie has written a note on Paytm. They have double upgraded the stock to outperform from underperform. The target price is increased massively to 800 from the earlier target price of 450 per share. They say that the FY23 and 25 loss per share is estimated to be lowered by anywhere between 18% to 72%. So the biggest surprise is the distribution business, control of cashbacks and operating expenses. They say that the price matters in conjunction with the fundamentals which is there with the company. So Paytm has positively surprised on the distribution of financial services revenue by a wide margin, and they also see a very visible change in the approach of the management towards profitability. So they have raised their FY23 to 26 revenue estimate anywhere between 33% to 51%. Earlier today we also had the business update for January coming from Paytm, which says that the number of loan disbursed is up 103% YOY and about 4.5% month on month. The value of loans disbursed, that's up 326% YOY and about 7.2% month on month. The gross merchandise value, that's up 44.5% YOY and about 1.7% month on month. Calculation shows that the average ticket size in this gross merchandise value is down about 2.9% month on month. So number of transactions have also increased by about 29% YOY and 4.7% month on month, while devices deployed, that has increased by 165% YOY and about 5.2% month on month. So all this are seeing in trade today. Back to you.
Okay, thanks Abhishek for that. Well, Zomato was also in focus today. The stock climbed 10% higher after the founder signaled a move towards profitability. Analysts hope for a good Q3 report tomorrow as well, which supported the stock. Manglam is here with the details.
Zomato in particular, they report their third quarter results tomorrow. ICICI Securities expects an overall revenue growth of 6% quarter on quarter and 59% year on year. But this morning we also had a CLSA note. They have a buy rating with a target price of 70 rupees on the stock, with the company expected to continue its march towards profitability. They expect 5% contribution margin and 2% adjusted EBITDA margin, which implies that they would turn EBITDA profitable. Remember, the previous couple of quarters, they were EBITDA profitable in their core food delivery business itself. And they've said that commentary around addition of cities and contribution of top cities will be extremely crucial. And due to increased focus on profitability, they've lifted their FY23 to FY25 earnings by around 4 to 8%. And that then finally brings to the point on, is it a good time for all the new age companies right now? Primarily because on the one hand, we see all of them talk about increased operational performance. Secondly, there has been a massive correction in valuations. Thirdly, there is tighter funding for competitors because funds have dried up. At the same time, these companies, because of the virtue of the funds that they raised in the IPO, they have a long runway for growth for themselves. And global interest rates, they are near peak. Everyone was talking about valuations for them falling as global interest rates were rising. But now if the belief is that global interest rates have peaked out, are we looking at some sign shifting for all these new age companies is something that we'll be monitoring.
Okay, all right, Manglam, thanks very much for that. Well, the Adani Group continued to recover lost ground as the management sharpened its focus on deleveraging. Adani Enterprises share price has doubled in the last 3 days. However, current market price remains 50% less than its 52-week high. Lucy Baldwin, the global head of market research at Citi, has said that the Adani controversy does not define India, and in a growing economy, issues like these will always be treated with skepticism.
Although I can't comment on the specifics around the Adani companies, I think it's very clear that Adani is not India and it is not the India opportunity. Of course, for all growth markets at this phase of the journey, any issues that look like this will always be treated with questions from investors around resilience, around clearly governance and clearly that political stability.
RBI Governor Shaktikanta Das spoke about the turmoil at the Adani Group. He said, quote unquote, the resilience of India's banking system is much stronger to be affected by a case like this. RBI Deputy Governor Mahesh Kumar Jain also added that the exposure of the banks is not significant and loans are backed by underlying assets and not market capitalization.
about the exposure of the banking sector to the, to one particular business conglomerate. We have issued a press release on last Friday. I have nothing more to add to that. So far as the, Indian banking system now, the total, the strength, the size and the resilience of the Indian banking system is now much larger and much stronger to be affected by, an individual incident or a case like this.
Our domestic bank's exposure is against the underlying assets, the operating cash flows and the projects under implementation, and not based on the market cap. The exposure as of now is not very significant across all the banks and the NBFCs as well. The exposure against shares of the domestic banks is insignificant.
All right, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.
Friends, I want to share some good news with all of you.